when you're not their only bank, and they have, let's say they're a convenience store and they're doing they have other business accounts elsewhere. It becomes a lot more challenged to follow the money. So one of our requirements is that if we're going to provide you with money service, business activity, banking services, we want your entire business relationship so that we can see the flow of money. Another area that we see that can be a little challenging is a lot of times the MSB customers, they're related to one another. And so sometimes you see them helping each other out in terms of their business, and you see some odd things with the cash flow, and you have to track that down. They can be a little challenging to teach them that they need to keep their business activities separate. So right. Those would probably be the two, that plus how the variety of activity that they're doing.
Right. Okay, thank you. Okay, Tammy, why don't you tell us about the Bank of Hemet and what you're doing, and then I reserve the right to come back and ask Anna and you both questions. So,
hi, Ruth.
Hi, Tammy.
Good afternoon, everyone, and thank you for having me here today. Talking a little bit about MSBs for our bank, and little contrary to Dana, who's been doing this for a really long time, we're just diving into this business line. So we kind of are dipping our toes into this. And a little bit about our incredible bank. Bank of Hemet's founded in 1974. We have 6 branches in Riverside County, and those are primarily based in the Hemet-San Jacinto Valley. We have assets of about $870 million, a nationwide lending footprint specializing in CRE, which is a pretty unique model. Currently at 88 FTE, and we have 4 full-time employees in BSA right now. Next. So it's kind of like, why did we get into this and why now? And as you can see in these areas, when we look at P&L opportunities, it's pretty tough to make money right now in most of these categories. Our interest income, we're generally around the 50th percentile, given that our investor clientele is pretty sophisticated. They demand really low rates. So there's that. You've got the cost of funds right now. We're actually a little bit lower than this. Our efficiency ratio has always been really good, primarily because we are in a area that's a little lower cost in labor and also facilities, being that we're in the Inland Empire of Southern California. So really the opportunity was in fee income, or is in fee income right now, for us to try to make some money. And so that's kind of why we were looking at, how is this going to work for us? And are there other reasons why it might be a good fit for us to consider MSBs? One of the reasons was we have had really good performance in other highly regulated areas. So as a result of a kind of not so great BSA review a couple years back, we created a really strong and efficient BSA department. We also maintain a strong, successful, and very compliant automated overdraft program. Not too many community banks really dive into this space, but we found it very profitable for our bank. Right now, though, what we're seeing is our customers aren't really bouncing as many checks. And so that fee income has dipped a little bit. We have a really good resource capacity at our branches and in our departments. As many banks do, we've seen our transaction volumes dip in our branches, and they're migrating to other channels. But we feel that we can use those resources in the branches eventually in BSA or operations if needed, if we continue to grow this line of business. So we have the resources there. The client demand, we've been hearing for quite some time that banks are turning away MSBs, and they're actually exiting the relationships that they have. So we've got some potential customers out there that are really looking for a bank. You know, MSBs, they really do provide an important role in our community. They provide certain services that individuals might not use a traditional bank for. So FinCEN has really tried to encourage banks to look at or consider banking these types of businesses, of course, using a risk-based approach. We feel that we have a good BSA infrastructure to accommodate these customers. We don't feel like at this point it's going to create a lot of incremental costs. However, we did spend some money at the beginning on consultant fees. So next slide, please. So how did we start this? First of all, we talked with our financial services officers. We wanted to know what kind of inquiries we were getting, what kind of businesses were coming in to ask for services, and what did they provide as services? Did they have just check cashing? Did they have, you know, multiple different kinds of businesses that they supported within that MSB? We asked them about the relationship they had with their current bank. We wanted to know if they were happy with their bank, if they would consider looking at another bank, because we really wanted to make sure there was a demand out there before we actually set up shop in this way. Once the decision was made that we wanted to pursue it, we decided to engage a consultant, and we used RAD for this. They helped us create a risk assessment and our policies, our procedures, and even assisted with our training, which was really a big help in getting this all started. They also helped determine what we wanted to do as far as risk appetite for an MSB. In the risk assessment, we kind of used that to determine how we wanted to approach the MSBs, and then in doing so, we made our recommendations to the board using our risk assessment. So next slide, please. As Radhika was talking about, there's different levels of MSBs. In BSA land, of course, all MSBs are high risk. However, there are different types of MSBs that are lower risk than others. So you've got the lower risk ones that we talked about that have, you know, routine transactions, maybe lower dollar amounts. They cash primarily payroll checks. They've been very established. But then on the other end of the spectrum, you've got MSBs that might have no limits on the amount of checks that they cash. They may do third-party checks or cash business checks. They may be a brand new business with no operating history. And again, that's really something that would make it difficult for us to do our due diligence on. They may be a money transmitter, and that again is a lot riskier in this whole business line. So if you look at where we're at, we're really at the lower end of this, this line, in that we're looking at the lower to medium risk MSBs. We want to be really selective at first as we continue to look at this. Before we slide any more to the right on this scale, we want to make sure that we've had continued good audits, our resources are good, and also that our board is also in agreement with how we want to proceed with this. So next slide. Our bank has always looked at P&L opportunities in kind of like a risk and reward type of scenario. We do loan out participation. We have our automated ODP program, money service businesses now. We're also looking, we've done a few customers on remote cash capture. We typically want to avoid those type of programs that require significant resources, or the establishment of a department, or that would have really numerous compliance responsibilities. So this is kind of how we've gone forward with it. Next slide. I've always thought that the BSA department can be a revenue center and doesn't just need to be a cost to the bank. You know, we spent a lot of money making our BSA area so efficient and strong, and I always have thought that they can identify opportunities for us. So we have done a couple of things that I think are good, and I think all BSA departments can be charged with, at the minimum, looking at certain things like identifying your cash intensive businesses. You know, they should be looking for those, making sure that those customers are charged correctly. We've had success talking to cash intensive businesses that are kind of being pushed out of big banks, and they come to us. We look at and see if we can help them out, and we've come up with like a flat fee negotiated pricing model that our customers really like, because it gives them a set fee and they know how much they're going to be charged every month for their account. So we've had good success with that. So, you know, like I said, we're just diving into this, and, you know, we're excited about the prospects for this, and we're, you know, hoping that we do a swan dive and not so much of a belly flop, but I think we're on the road to doing a really good thing in the MSB world.
Thanks, Tammy. Sort of the same question I asked Dana too. In starting this up, have you put together any projections of, you know, how many you want to bring on at what point in time? Weighing that against FTE count and the 4 FTE you have in your BSA department now, and looking at that?
Yeah, I think it's kind of difficult to project that because, as you know, MSBs are all different types, and some require a lot of work, and others may not. The ones that we currently have are on the lower risk of the spectrum, and so the resources aren't really needed right now, although it is, you know, some. But I think what we want to do is make sure that we look at the regular BSA activities and making sure that they're not falling behind. You know, we want to make sure that our SARs and our EDD reviews are all completed timely. And I think if you see that kind of slipping, or if there's any kind of risk there, then you know that maybe your resources are being spread too thin. So we're kind of looking, you know, doing a review of our department on a really regular basis to make sure that the workload is appropriate. You know, are they handling the ones that we've taken on? And just making sure that there's really good constant communication with your BSA officer.
And one other question, Dana talked about automation and how automation is important to create some of those efficiencies, as well as, sounds like she could use a little more automation if there was something out there. Do you currently have automation within the bank that you can utilize to help you with these?
Well, we obviously we have an automated monitoring system,
BSA,
like most banks do, and that's provided by our core provider, Fiserv. That system is pretty sophisticated, and I think we know it really well. We actually are working with Fiserv consultants right now to recalibrate our FCRM system, our monitoring system, to make sure that it's capturing the BSA activity correctly. And I think that's really important, that you make sure your system is doing what it needs to do. Another thing that we're exploring, and not sure exactly at what point this next coming year, but we kind of want to look into AI and see how we can maybe utilize that for efficiencies within our BSA department.
Interesting. Thank